Hey, good morning, good afternoon, everyone. Trendy John here from Simpler Trading. Let's go ahead and get started with this week's broad market analysis. If you would, please go ahead and hit that like button. And if you're not already subscribed, make sure you're subscribed to the Trendy channel where I send out every Sunday the broad market analysis. Please keep in mind the broad market analysis is something I've been using and giving out for many years to kind of help me understand what to expect from a week to week basis. But I also cover some quarterly charts here as well. The first thing that I want to look at is the dates that we're covering, and that's going to be September 21st through the 26th. We do have all days open, no holidays, nothing like that. So let's go ahead and move on. The first thing we're going to be looking at is going to be Market Watch. Market Watch here is showing the U.S. economic calendar, and what I'm looking at are catalysts that push price from our levels where we teach in the room how to align ourselves with the bigger money. So again, these catalysts here just push price there a lot faster, and we're hoping for a little bit of volatility to create what I would consider a really fun market. So this week's major U.S. economic reports and Fed speakers, Monday, the September 22nd, you guys can see here, starting on Eastern Time. 9:45, we have New York Fed President John Williams speaking, and then we have President Alberto speaking as well, and then Fed Governor, and then a Cleveland Fed President Beth, Richmond Fed President Tom Barkin. So we can chalk it up as Monday as talking heads are speaking and could say something that could cause some volatility, but not much here for me to be too concerned about. Tuesday, September 23rd, same thing. We're going to be looking at the Eastern time here, and we're paying attention to this. This could be interesting. We have Fed Vice Chair for Supervision, Michelle Bowman, speaking again. S&P Flash U.S. Services PMI, S&P Flash U.S. Manufacturing PMI, and Atlanta Fed President Raphael Bostic speaking. And then to finish it off, we have the good old Jerome, who will be looking at a speech coming in at 12:35 Eastern time. So, about an hour and a half or so before the market closes, at least here for us. So be aware of this on Tuesday. Things could get pretty interesting. Maybe that perhaps means Monday will set us up a nice playing field. We'll find some good zones, some good levels, some good Fibonacci, and be able to have that set up for a nice fun trade to do with you guys live there around that time. On Wednesday, September the 24th, again, all Eastern time, guys, new home sales coming in at 10 o'clock, and then at 4:10, San Francisco Fed President Mary Daly speaking. And then Thursday, this one's really long. So again, Thursday, September 25th, we're looking at Chicago Fed President Goolsbee speaking, initial jobless claims, GDP third estimate. All right, so some big info here coming down. Advanced U.S. trade balance and goods, advanced retail inventories, advanced wholesale inventories, durable goods. New York Fed President John Williams speaking, Fed President Chair for Supervision Michelle Bowman, and then existing home sales, Fed Governor Michael Barr, Fed President Lori, and then San Francisco Fed President Mary Daly speaking, and Fed President, Fed this, Fed that. A lot of speaking going on this week. And then Friday, September the 26th, personal income. All right, personal spending, PCE index year over year, core PCE index, Richmond Fed President speaking, consumer sentiment, and Fed Vice Chair for Supervision, Michelle Bowman speaking. So that seems to be, for me, the title for this week, Fed Heads, right? And so let's see what they say. And I will show you some charts here soon that kind of say that the market could cool off a little bit just because of a cycle of 2 to 3 weeks up, or maybe we perhaps just keep going up, right? But price is king. We know that. And again, guys, these are just here to allow us to understand when these are coming in. I would say just check these calendars in the morning before you get started so that you don't forget about what's popping up. Okay. All right. So the next thing that I want to be looking at is this week's earnings calendar. All right. So I'm going to bring that over as well. And right here, it gets a little interesting. It's still, it's pretty light, if you will, but I love this. MU, one of my favorites this year, is going to be reporting. I will be most likely taking a trade into earnings using debit spreads. So stay tuned for that. I will most likely go over that Tuesday morning. when, after we get off of future trades, option trades, equity out of the way, we'll be setting up an MU trade for earnings using debit spreads. Okay. Wednesday, we have KB Homes. Definitely not Stitch Fix. Don't really care about that. Costco, CarMax. And other than that, this is probably my favorite names coming into this week. So again, these could be possible setups for some sort of earning trade. If there's a name that's not on here or one that I'm not discussing and you would like to know the levels that I would consider into earnings, please just reach out to me in the chat room. I'll be happy to answer you. All right, so the next thing on my list that I want to go over is going to be SPY using the bigger picture. And what I like to concentrate on is the quarterly candle. We did make a new high this past week. I'll show you the weekly chart here just in a few seconds. But far as this chart is concerned, this is the one that I really run my portfolio in. And you guys can see the yearly is extremely bullish. What I'm using here is Fibonacci's. It's looking back at past ranges. It's given me my Fibonacci that I teach in the room. And so therefore, as far as portfolio is concerned, obviously I'm buying the dip on smaller time frames. And that continues to be my overall sentiment going into this week. Okay. So this week, again, is a buy the dip for me. I do feel like we're getting a little extended. And like I said, the cycle looks like we could come into a little consolidation. But again, I'm very open mind that the trend just kind of continues after we buy the dip. Okay. All right, so that is the quarterly chart, and then now we are going to move into the weekly. We had some extension targets. I removed some of them because we hit them all, and I left the 66489 up here. It looks like we kind of came up and tapped this, and we kind of slowed down. What I was talking about when it comes to weekly cycles is I like to talk about the cycles in forms of 2 and 3. So, for example, on the SPY here, we're 3 weeks up. That is 3 white soldiers formation, sort of what I'm talking about on the quarterly and what I'm projecting for the end of this year. Sort of the same thing, though. I would expect it to potentially cool off if we don't get up and over 664.89. So just use this level as kind of an over under, if you will, and just understand if we start to break down underneath, we could be coming back into smaller time frame support. And that smaller time frame support, I'll go over on the ES futures chart at the end of this broad market analysis. Okay. A few things to take away from here. We have a bullish channel from the gap. And the primary 23.6. So bullish channel from the gap just means I've taken my Fibonacci's, I placed them here, found those levels, and then from the primary, I'm using the low of the year to the high of the year and coming up with that 23.6. I combined them, and that's the level that I'm looking for this to be supported going into the end of the year. So I would expect buyers, if we were to come into here, I do understand that it's really wide, about $30 or so. But that's okay because, again, we're concentrating on the bigger picture when we are looking at these charts, okay? All right, so extension targets we can see up to 672, 686, 709 into the end of the year if things really continue the way that they're going. All right. And that's all I really have about SPY. One thing I will note is I told you the trendy indicators here, after giving us green arrows, we were looking for bullish sentiment to continue. And you guys can see the result there. It just kept pushing and pushing and pushing. And here we are. And I'm just really, really happy about that green arrow that comes from your cloud indicator. Makes me happy to see that it continues to follow through. And if you go back and study these, you will note that they are very reliable. Not 100%, but very reliable. Okay. All right. Now I'm going to move on, and we are going to take a look at the QQQ. And just like the SPY, I'll go over the bigger picture. So let's go ahead and place that in here. And as a reminder, guys, don't forget to hit that like button. I really appreciate your support. So on the Qs and on the quarterly, I didn't say this about the SPY. I feel like I give the SPY so much love, and the QQQ I typically go through pretty quickly. So we'll spend a little bit more time on the Qs chart here. The thing that I want to take away from this is, again, giving attention to the trendy cloud and just noticing how those EMAs really work well so that if price does come back to the EMA cloud, You've heard it here. I'll be looking at buying that dip. Now, of course, we're very extended from the 9 EMA at this point, but earlier in the year, we did come back to the cloud. I addressed it every single week, even when we were pulling back, that I was layering into my long-term positions as long as this chart did not break down. That's exactly what we did. And guess what? It's a profitable year. So I'm really love this cloud. And I want you to love it too, because really, it's been a long time. It's been since back here in 2009, 2010 that prices actually was under it. Ever since it reclaimed there, it really used that cloud as support. The next thing you're going to notice is we have some Fibonacci's on here, and I'm just anchoring them from the low of this year to the high. I'm coming up with our bulls channel, but one thing I would note here on the quarterly is that the golden pocket, that's what GP stands for, plus the 9 EMA are confluent here. I really like this area. I'm not saying we're hitting it this year, but if for some reason we get like a shock surprise in the market where we get that really deep pullback, I hope that if it were to happen, it's a very quick one, and then we just resume the trend for the rest of the year. So I wanted to make sure that I do bring this up just in case it happens. Every year when we start the year, I always say this, and I typically say it very consistently, is that every year brings us at least two times that we have some sort of big move in the market where I would say it's to the downside. And for this year, I only feel that came once. So this is a little bit of a different look, if you will. I don't know because I can't tell the future if we'll have that second pullback, but I will tell you that if it were to pull back, I do think that it could come somewhere between this bull channel and this 50 and 618. And again, if it were to happen very quickly, I'd be very happy. I'd buy that dip, and then I'm just looking things forward to continue. Okay. Now, if we just continue to move up, like my projection, don't get that confused with this. This says projection. I'll cover that here in a minute. But for my projection for the end of the year, which is our 2025 projection that we had in 2024, right? So I brought that up and I was like, hey guys, this is what I'm looking for by the end of the year. And let's find that real fast. Actually, not on the Qs. We'll look at it on the NASDAQ. This projection here was for going into the end of the year because I'm always giving you the projections on the future charts. I wanted to give you something on the QQQ. And I do believe that we could see up towards 641. Now we're in this zone, if you will. All I did was use some structure, some Fibonacci, and put that together to give you this. So I would say that we hit our first level in here, a projection of 594. If you wanted to find more targets within this zone, use this tool right here called quadrant lines. We're going to go up to the top line and bring it down to the bottom. And what this is going to do is cut this into thirds. So your next targets would be 606, 617, 629, and 641. Okay. So that's what we have on the Qs. And to the downside, what I'm looking for is near-term support, I guess you could say, from a quarterly standpoint. We're going to use the trendy indicator, which is your future yearly edge, and that's coming in around 576. So again, near-term or near price support would be 576, and the bigger picture is if we get that dip at some point, and it could be into 2026 before we see it, but I definitely have my eyes set on these levels down here. Okay, now let's go ahead and go to the weekly. So our weekly looks like this. Your support for this week is going to be 590 by 578. Just like the SPY, we have 3 weeks up here, or 3 white soldiers. And you guys can see this is very bullish. I know that. And all I'm saying is if we were to get some sort of pullback, then I would look for a little bit of consolidation this week. Just use the highs. Let that be your over under. As soon as price gets up over the high, we can use that as an over under and kind of use that as a short term support level to kind of trade into intraday. But far as the week is concerned, it's not until we really start to break below the weekly edges that I'm really saying, hey, be cautious to the upside until we dig deeper. So if we go under the yellow line here, then it's it's definitely different. It's sideways to down until proven otherwise. And that basically is 598.25. So just remember that number. If we're underneath there, look for sideways to down. I would prefer buying down at the 590 to 578 level if we were to get that pullback from a weekly standpoint. Okay. So again, guys, that's what I have on the weekly. We addressed it. It's a beautiful chart. Things look really, really good, but they do feel a tad bit extended. But remember, price is king. We just want to focus on our methodology and not try to predict and say exactly what's going to happen, because that causes bias and will keep you from taking a trade. I'm just saying that it feels a little extended. And if this, then that, if we break down below that edge, start to think, okay, maybe sideways to down. And since I gave you those numbers, let's just go over here really quickly and look at SPY's 4 hour, so I can give you those numbers as well. So on the 4 hour, I would say sideways to down. Again, if price stays under 663, let's just call it 0.67. Yeah, 0.67. As long as we're below that, look for sideways to down. I'd be looking for lower levels to buy at. So again, on this weekly, when I look at this, it could be all the way down here at 644. That's kind of far down, so I want to readdress this. We're going to measure the 3 weeks here. Okay. And I would tell you, as far as support is concerned, 657 by 653 is going to be our support going into this week. And again, you can break it down into smaller time frames and make sure we have confluence in here. Look for some structure and so forth. But let's go ahead and label this as support for this week. Okay. And again, these are the bigger levels down here. And I'm going to put a little gray box there. Boom, just like that. And we're going to move on. We went over the SPY and the QQQ. The next on the list is going to be the dollar. We're going to type in $ and then DXY. And then I use the second one on here, ICE US dollar index. And I have to tell you, this thing has been spot on for the entire year. I feel like this has really helped us in the broad market analysis. And if you've been here with me every single weekend, then you know that we are on top of our game with looking at our projections. And it happened just like I wanted it to. Price did break down into the zone here. And then this is the big question this week. Is this zone going to actually hold the dollar and perhaps rally the dollar a little bit more to the upside and allow that market to sort of come in a little bit like I've been talking about? Again, I don't know, but what I do know is my chart worked very, very well. We hit the level, it popped as we've been talking about, but it's still rejected at the cloud. So this is resistance until proven otherwise. I'd say the market's pretty neutral if we just stay between these two, but if we start to rally above 98.20 and the market's moving down, keep these two on your radar, meaning the market and the dollar. If the market continues to rally, it could get up towards 99.5 to 100 in those areas. Once we hit those, I would expect it to pull off a little bit and then resume the trend in the overall market. So to summarize, I think we're neutral right here, but just be careful if we start to rally above 98.20. And if we were to come back to the green zone, I would be careful as well. Just, check in the market, see what the conditions are. All right. So there's the dollar. The next thing that I want to be looking at is going to be the TNX, or the 10-year treasury. This is going to be really, really quick. Same thing here, guys. It's been the same zones the entire year. Like I said, we're neutral in between here. I am expecting this to roll over and basically close down here towards the end of the year. I'm not positive with that at all. And I'm happy really with this pullback, and I'm happy with this pullback. I've seen what I needed to see in the market. So if it continues to come down here, cool. If it doesn't, I'm not upset about it. Okay. But my biggest thing before I move on is I'm really not concerned unless we break above there. And I'm really, not saying anything unless we break down below there. So everything between here is noise in my opinion. So next thing I want to be looking at is going to be the skew. We're going to come back over here, okay? On Thinkorswim, we're going to type in SKEW, and I put together the skew chart that we talk about every weekend on here. And as you all know, my big tone that I've been talking about for the last several weeks is that this is a little bit different look for me. I keep thinking that we're going to get some kind of big move in the market. I don't know whether it's going to be to the upside or downside. Now, when I say that out loud, I understand that the big move has happened for the last 6 or 7 months. The market continues to move up, but we haven't had a volatile moment in a while now, and the VIX is really down at the lows where it could see a volatility index spike, and we're sitting here. What I will tell you about the skew this week is in my opinion, it's not syncing up with the fear and greed, which is my next subject, but we'll go back and forth to these. So we went from, I think it was 54 last week. Yeah, and it says right here in the neutral. And then we moved over here to 62 in the greed. Now, typically, when the market is getting greedy, the majority of participants are buying calls. They start to get a little bit complacent, and it's a great time to pull the rug, if you will, just to kind of reset things. But when I look over at the skew, it's telling me in this case, like what I would think I'd be seeing is that the skew would be trending up, right? And so that it's saying, hey, you know, it's time to possibly think about insurance or looking at puts. But in this case, we are getting more bullish, but the skew is coming down as if the market is scared. So I'm not seeing that. And it's not very confluent. So I don't want to look too much into it. I just want to say that it's still in this channel, which is right here. And at the moment, it's just not making a lot of sense to me. Most of the time, it is making a lot of sense to me, and I know exactly what to do here. But this time, guys, it's just not really synced with the overall market at the moment. Maybe it will come into alignment pretty soon. But again, guys, if we get a sudden move down here, that means we got a sudden spike down in the market, and I'd be looking for risk on. And if for some reason we move up here, that just means we keep cruising to higher highs and maybe a lot of more volatile but still increasing. So prices are increasing, then we could get to a risk off environment. But as of right now, this tells me right here, don't try to guess anything, just trade the trend. All right, that's exactly what this is saying. So don't overthink the idea. I just think something's coming soon. So again, guys, the fear and greed index for this week is 62. And the fear and greed is 62, in which that now puts us into futures. All right, so let's go ahead and talk about our futures. We'll be going over the ES, the NASDAQ, and then finishing off with Bitcoin. All right, so I am using \ES, and this is, and last week we did have the rollover, so we got that gap, but we did continue to move to higher highs, and this is what the weekly looks like on the ES futures. We had the green arrow. We were looking for continuation. We got that continuation this week, and we did hit our extension targets, and I changed this up a little bit from last week. Now I have extension targets from 67.58 to 68.62. I have a green zone identifying, and in this area, I would expect buyers to come in. I see confluence. I see that the yearly trendy edge is over here. I see there's a green arrow. I see the 9 EMA. So again, guys, if we were to get a pullback, this is definitely the first area I would be interested from a future swing position is in here. Okay. And again, let's go ahead and move on now and get into the daily. The daily is where I set my triggers. So, and I use Fibonacci and I use extensions. I use Fibonacci and I use structures, and I'm looking at my cloud, all the things that we teach here in the room. And what I would note from here is that we have 2 days up. Remember, 2 to 3 days up, and then I look for a little bit of consolidation, if you will. Sometimes we get more than 2 to 3 days, and that's okay. We'll attack it when it happens. But again, 3 weeks up, 2 days up here, we could be looking at a little bit of sideways action going into Monday. All right. All right. And what else? Oh, the trigger longs to the downside. I would not, just blindly trade these or anything like that. These are just levels. And when price gets there in the room, we teach how to jump into these trades. If you're interested at these levels, there's certain or different things that we look at on smaller time frames. All right. The next thing that I want to show you is going to be the 4-hour chart. This is pretty straightforward. There's a couple zones that I found on here. I have a 2-hour zone in this area from 6,700 to 6,677. I have a 30-minute zone, 6,710 by 6,705. Both of these zones basically saying we could see a bounce or relief rally from here if we were to pull back. The other big levels for this week are going to be your upper weekly edge, which is around 67.18, and your lower weekly edge, which is around 66.24. Okay. All right, so that leads us now into the NASDAQ. We'll take a look there. And just as a reminder, I trade futures every single morning. I call those trades out in the room. We do not have API future alerts because in most cases, from an intraday standpoint, we're in and out, making that money fairly quickly. And then when we get to bigger zones is where I want to be taking swing type trades with my futures. So really over the last several weeks, it's been more about just like quick moves in the morning. So just think about that. Okay. So on the NASDAQ, same thing, guys. We have 1, 2, 3 weeks up. We hit the highs like I was projecting. We did that. We followed through. It was a really strong week. We now have support on the weekly from 2443 into 23729. And then below that, we have some zones as well. Just take note of those. Let's go ahead and move on. We'll go into the daily. The daily, I have some resistance. This is an over underline, if you will. And if NASDAQ were to come back down into the trigger longs, I'd go to a smaller time frame, take a look at our signals, see if there's anything that tells me, hey, this is worth taking a shot at these trigger longs, and I would do so. If you want to, you could just freeze the screen, throw these levels on your chart, and see how price reacts when it comes down into those levels. On the 4 hours, same thing. I have an upper weekly edge and a lower weekly edge. And then I went ahead and identified a 2-hour, but I will tell you it's a lot like the ES futures right here in this area too. If you're interested, we have some support. If you were to take this down into a 30-minute or a 2-hour, you'd probably find something right in this area. So just know that this 9 EMA is confluent with some structure and support there. So even if we come up underneath here, just look for a little bounce there. Now, just like the SPY and the QQQ, if we're under the upper weekly edges, my overall thought is sideways to down until we get into those zones, and then we look to try and take trades from those zones. The last thing on my list here is going to be Bitcoin. And yes, I am a long-term Bitcoin holder, and I'll give you updates from a weekly standpoint, but just know that my bigger picture that I'm into is going to be on the quarterly chart. So when we get over to the quarterly, my overall projection for this year was 138 to 167. We still have a lot of time for this to happen. This is not the strongest candle. This isn't the strongest candle. At one point, it looked a lot like the ES and the NASDAQ. And so I was really excited, and then it kind of popped up again, and then it's come back a little bit. So it's really not doing a whole lot. It's been neutral, as I've said, over the last couple weeks. But let's dial it in and look at a little bit smaller picture. Here is the weekly. This is the zone or the inside and up that we were anticipating. And this is where I felt bullish as soon as we broke over this level here, was to stay long and be looking for a potential move to 123. Now, I did notice that we had a zone of resistance up in this area, and that's exactly where we moved to, and we rejected this past week. The big thing about this weekly chart is that it ended on an inside and week, and it could go inside and down. It could go inside and up. If we go inside and down, I don't think it's going much further to the downside because it's creating this support here. If anything, I think it still continues to be a buy the dip. And then perhaps if price gets over this level of about 116.8, all right, then I'm looking for prices to continue up into this gray zone and potentially getting to 123. And of course, guys, if we take out the highs, I think we just keep getting closer to our projection for the year. Now, before I move on, this is kind of impromptu. I want to make sure I update you guys for the rest of the year, talking about my 2025 projections on the ES futures and the NASDAQ futures. So let's do that together. Let's come down here. Remember, this was my projection that I gave to the team here in 2024. And I have to say it's worked really, really well. We've continued to move up. And the first couple of months, I want to address those. They were bullish and then it got very bearish. And the whole entire time I felt that way coming into the new year. And I had a plan to buy the dip. And you'll hear me keep talking about that. And I think it's important for you to hear it because not only because it worked out, but because I had a plan before price did it. So we were paying attention to our trendy edges, which is part of our indicator suite that we have here at Simpler. And we knew that once we broke down here that these levels were supposed to be support. So let's say that I had leaps on, which I did. The idea was to add into certain levels as we kept coming down. It was uncomfortable, but here I am telling you right now that it worked out very, very well back to the upside. And my projection is right around the corner at 7,016. We are currently only 300 points away from that. And if you've been in this market for more than 2 years, you know that can happen very quickly. Now, I think because we're extending and we're moving to the upside like this, it seems a little ridiculous for me to think that we could hit 7,000, in the next month or something. But gosh, man, who knows? This market's pretty insane. And I keep thinking to myself, what if we hit 7,000 or we hit my projection, then we come back down about 23.6% of the range, and then we just, end up rallying right back into the projection? That would be cool too. All right. Big thing here, really big thing here, I think, is that we pay attention to the quarterly candle and understand that your quarterly candle is closing in 9 days. So we have 9 days, anything can happen, but right now, folks, the 9 days ago, this candle looking like it does is very, very bullish. It looks great. I like that we're closing up towards the highs. There's nothing bearish about this at all. The only thing I think that's really hard for a lot of traders, if you've been around and you're a technical guru like myself, you just start feeling like, hey man, this the deviation between here and here is pretty wide. So I'm just being aware of it. But it feels a lot like when we came into 2025, we looked just like this and it kept staying bullish and then we finally got the pullback. Okay. Anyways, that's what I have right here for the 2025 projection on the ES futures. Let's go in and see how close we are with that nice rally we had for the NASDAQ and see, where we are as far as the projection goes. And wow, I mean, just wow, we are super close to that projection, guys. I'm very happy about this because, of course, I'm already telling you that we're almost to the projection that I set out in 2024. Prices came back into levels, they held those levels, and then continued to move up. So everything's kind of worked like we wanted to, and we're just so damn close. We're only 1,900, well, just 900 points or so away from our 2025 projection with, almost 4 months left in the year. So pretty cool. I love it. I'm going to keep you guys up to date every week though with these 2025 projections, just in case something really wonky happens. I want to make sure you guys are getting the information you need to stay on the right side of the trade going into the end of the year. And don't forget, Melissa and I do have a challenge coming up. It's going to be starting October the 20th. So if you want to come into the room and just kind of see how we throw down, it's only $7 for 30 days. So come in for the trial. And if you are a past member and you've been thinking about coming back in, just do the 30-day trial. Come and hang out with us for the next for $7 for 30 days. And then if you want to stick around for the challenge, which I assure you you would want to, so make sure you're there and get ready because I think it's the biggest challenge of the year. I can't wait. Have a good one. We'll see you soon. Have a great weekend.